It's successful for the big GPs, but I think below that level, it's still hard to raise money. We're seeing a shift, in assets moving from hedge fund classes into more illiquid classes, private equity, uncorrelated investments, as well as people putting together hybrid funds as well, with a mixture of liquid and private equity type investments. So we're seeing those sorts of shifts. Yes, they are raising money, the big ones, and therefore they need to keep pace with what their investors are requiring in terms of the sophistication of the reporting. So they don't want to just hear how well they've done. They want to know how your portfolio is split between types of investment, geographical analysis, so they can really understand what the portfolio risks are and how it's put together. LPs looking to go direct or co-invest rather than going through fund vehicles is a big change. Historically they used to say, we'll trust the GP, we'll have an allocation to their fund, and we'll trust them that they're going to make the right allocations. Now, many LPs are looking to not just invest into fund vehicles, but go deal by deal with the GPs. And that does require some more resource. It's more complicated, and we've had many clients come to us and say, we've done these 20 deal by deal transactions, but how do we know that the carry is correctly calculated? Are we calculating it? Are they calculating it? So in many ways it's good to have someone independent, and particularly in those situations when you're going deal by deal and there's just two of you in that deal, to make sure that the carry calculations and the internal reporting is done correctly. I think it's making it harder to find the right deals. Certainly more pressure to find good deals, and there's more competition around deals when some of the big pension funds, the sovereign wealths, they have that sophistication now to go direct rather than through a GP, and that's making more competitive, I suppose, for the good assets that they're both looking to buy. I mean, the GPs have got to keep evolving. They have to have a reason to add value, and if they're providing sophisticated reporting on a timely basis, then the LP is seeing that they're getting everything they need from that GP, and they don't have to go and try and recreate it themselves. They realise recreating it themselves is expensive. They have to have a team to manage it. They have to have a team to source the deals, have to structure the deals. So if they don't have to do that, they prefer not to. So as long as the GPs have the right infrastructure and the right levels of reporting and the timeliness of it and the quality of it, as well as the GPs price correctly as well. So I think some of the LPs may be going direct because they're feeling that the GPs might be charging too much in some situations, the carry might be too high. So your GPs are going to have to show some flexibility as this evolves.